Thanks a lot. Thanks for having us.
Yeah, absolutely. By way of introduction, my name is Cal Rose. I work with Erica G at Wright, Lindsay, and Jennings. Work in our business and transactional team, focusing on mergers and acquisitions and raising capital and just helping businesses across industries, but specifically in this context in the cannabis market as well. Joined here by Dan Roda, former attorney, still an attorney,
Technically,
but also a co-founder and CEO of ABACA. Joke with Dan, one of the benefits of going in-house is you get to wear a lot more comfortable clothes than you do in private practice. So I am a little bit jealous of that.
yeah, that's just one of the benefits. You know, we started the company just down the block from here in the Little Rock Technology Park, shortly after Arkansas passed our medical cannabis amendment, and the industry was gearing up. And as some of you guys might remember, it was an interesting time here in Arkansas. There were a lot of people in the community, certainly myself included, who were interested in finding ways to get involved in this new and exciting industry, especially those of us who had maybe been secretly or not so secretly passionate about the cannabis plant for some time prior. And as an attorney, had the opportunity to represent some folks who were looking to get into the space, and kept running into one really big problem in the industry, and that is banking. Of course, at the time, Arkansas was the 21st state to legalize some form of medical or adult use cannabis. So we were not the first, and that gave my business partners and I the opportunity to look out west and see how others were providing financial services to the industry and bring and do that here in Arkansas. But it's interesting to reflect here at an event in Arkansas. Well, some time has passed since then, and now something like 41 states have passed some form of cannabis reform. And so if you, like many of you in this room have, began getting involved in the industry at the beginning here in Arkansas, even though it doesn't seem like that long of a time ago, I'm here to tell you all you guys are now experts. And so that's kind of an interesting thing. It's a testament to how fast this industry evolves, but also kind of how powerful it is. So, good to be here and at an opportunity for the cannabis industry to gather right here in Arkansas. It's a nice thing.
Yeah, absolutely. And Dan brings up a good point that segues into the topic of what we're talking about today. Our discussion is going to focus on mergers and acquisition and trends in buying and selling cannabis businesses, what we're seeing on the legal side, what Dan and his team is seeing on the financial side. In 2021, there were 3.5 times more M&A deals and activity than in 2020. We tend to expect that trend to improve as more and more institutions and private equity groups get more comfortable with this industry and finances become more readily available. We tend to see those trends start on the coast, kind of like with your financial services, and then work their way kind of into the heartland of the country. Just Dan, what are you seeing right now in the M&A market? What's out there? What are the typical kind of deal structures and flows that you're seeing?
Well, 2021 was a really hot year, and we're off to a pretty active start in 2022 as well. And, like you said, this is something that has been happening nationally for a while and is starting to make it down into states and markets here more towards the center of the country. But one thing that I'm seeing that is fairly new is that there is now a lot of interest from the coasts, from institutional capital, from larger sources of capital, specifically in Arkansas and in markets like Arkansas. We are what the cannabis industry refers to as a limited license market here. In the prior session, you heard Eddie Armstrong articulate some reasons why that is beneficial and why that will continue to be beneficial for the people here in Arkansas to ensure a safe and well-regulated supply and a viable industry and a business environment in which people can be successful. And we expect all of those things to continue under Responsible Growth Arkansas. Those are also factors that make the businesses here in a state like Arkansas very attractive for an acquisition or merger or business combination sort of transaction. And so we are seeing increased interest here outside venture capital and private equity, looking at investing in operations here in Arkansas, and even some acquisitions and consolidations. there was a big buzzword in the industry last year around SPACs. That's SPAC, stands for Special Purpose Acquisition Company. This is one method of taking a company public, and it's a little bit different, but it's been more popular in recent years, where an entity is formed, listed on a public securities exchange, and then goes and acquires one or more target companies. And as we sit here in 2022, the phenomenon I'm seeing recently, and I'd be interested to hear if you're seeing this pop up as well, a lot of these SPACs that were formed intending to buy, let's say, a cannabis operation in Colorado or California, may have not been able to close on that transaction. And now they're in a situation where they're looking for an alternative. And so if you're an operator here, looking for a liquidity event, there could be some really good opportunities on the horizon.
Yeah, and I think that is true. Typically these SPACs, this fancy term for a group of people who pull their investment and funds together and go out and look for acquisition opportunities. Once they raise their money from investors, they have a timeline to spend that money. It's usually 1, 2, 3 years. They have to go out and acquire companies and find it. And so if they have, a particular target in mind, maybe in California, Colorado, one of these markets that are a little bit more open, and that deal falls through, they then are on the clock and are looking for alternative vehicles of where to put their money in. You bring up a good point that Arkansas is kind of a limited license state. There are a lot of regulations in Arkansas around who can be an owner, what the ownership percentages have to be, and all of those things. Makes our job on the legal side of this a little bit harder than your typical just kind of M&A transaction. And because of that, in this market, what we see a lot more of is kind of MSAs, management service organizations coming in. And it may not truly be an acquisition, but the terms of the financing provide, a buyout of some of the existing owners. They come in and provide some services as well. And so I would encourage anyone who's kind of looking at this process to be open and flexible in terms of how you're willing to, kind of enter into that exit transaction. It may not be your traditional, we're selling all of our equity, we're selling all of our assets to a completely new buyer, because the regulations in Arkansas make that pretty difficult. So flexibility, having your ducks in a row, which is something we'll talk about a little bit later, those things are really important in order to maximize owner value, which is what everyone is looking for in this process.
Yeah, ownership requirements, such as we have them under our structure here under the Arkansas Medical Marijuana Act, and will presumably have in the future. They're not unique to Arkansas, but they're an interesting thing, because for those for those of us here locally, they've created some interesting opportunities to get into the space. If you guys remember back when the original wave of licenses for our medical program was issued, and the large number of applications that went into obtaining those licenses, is you had a national group, and there of course were then, and now certainly still are even more large national groups that certainly want to be involved in the industry in a well-regulated state like Arkansas, where, by the way, it's been proven we enjoy our cannabis here in Arkansas as well. Sales numbers are strong. People want to be a part of it, right? So as those national operators look to get in, those state residency requirements have the effect of effectively forcing them to come partner with local interests and make friends in the community, and show how they are going to be good stewards of the community in order to get in. And that creates opportunities for local business people to partner with those local organizations under some of the management agreement type structures that Cal was just outlining. The flip side of this, however, is that as cannabis goes national, there's this new risk on the horizon. This has happened in Missouri and maybe some other states, where these ownership requirements are actually being found to be unconstitutional. They are deemed an impediment to interstate commerce. And so somebody that might get in and think there's maybe a moat might find that moat has evaporated at some point in the future by the court rendering the decision on this or that. Of course, in an industry like cannabis that's on such unsettled legal ground as it is, that's always a risk in any number of different aspects of the industry. I'm sure the operators here in the crowd, especially those maybe in edibles divisions, will tell you about some hard times they've had when a regulation changes or a court case comes down and they have to completely change all of their molds and their production equipment and all of their equipment to comply with this or that. So those are just the kind of pitfalls we're used to running into, just, to get to be in this industry, right?
Right. Yeah. I think if you've been in this industry for since its founding, flexibility is something that you're used to. Being able to pivot and having to shift focus and being malleable to the changing regulations and the changing interpretations of those regulations is something that's not new to anyone in this industry. And it's also, again, we brought up how because traditional M&A is not necessarily always on the table for this industry, and looking at some of those more creative solutions for structuring a deal becomes all the more important to make sure that your kind of in-house is taken care of. Your due diligence is done already internally. Due diligence is one of those words that I think lawyers like to throw around that maybe people roll their eyes at or aren't always exactly clear on that.
Well, let's put it in terms people understand.
That's what
due diligence is really simple. It means getting your shit together. And if you would like to put your best foot forward in any possible business conversation, whether we're talking about an acquisition or a partnership, or maybe even just presenting yourself for a new job or other opportunity as the industry advances, it's important to have your house in order. And so, due diligence is the fancy lawyer word, like you said, but that's all we're really talking about here is getting your shit together. And so let's talk about that.
Yeah, I was going to say, let's talk specifics about getting your shit together. I have a couple of documents that I provide to my clients that are titled "Get Your Shit Together." So this isn't new to me either. Talk a little bit about contracts, equity documents. The acquisition process is not something that typically happens overnight. It may, if there's some sort of deal that comes out of nowhere that's just too good to turn down. But typically this is a 3-month, 6-month, 9-month process. Especially as more sophisticated buyers start to enter this market, you're going to see more sophisticated due diligence, and they're going to have an expectation that you already have all of these things in a row. What are some key kind of guidelines that you can provide in terms of getting businesses prepared for that process? Because if you wait until the deal's on the table and then you're trying to get all of your documents together and all of that, it's too late. Time, we have a saying in the legal industry, time kills all deals. If you wait too long to get all of your shit together, that deal may go away. Again, these buyers a lot of times are on a clock on when that money has to be deployed into the market. And they don't always have time for you to wait and go and talk to that shareholder who may have invested a couple $1,000s in your business during the licensure stage, but you haven't talked to them in a few years. And do they still own a piece of the company? Do they not? That's not an issue that you want to bring up to a potential buyer once they're ready to close the deal. You want to make sure all of that's kind of done on the front end. Practically, as we kind of get into that, what are some steps some businesses can take to get their house in order?
Well, I think you just flagged a big one, which starts very far in advance, and that's when you put your group together to maybe even first obtain a license or start a business. You may not be thinking about this, but at some point in the future, you may find yourself in a situation where you have an opportunity to sell the business or merge with another company or take a big step forward. And you don't want to have to track down that one guy that you gave 5% to because he told you he was from Colorado and he would look good on your application, right? So if you have something like that in your ownership picture, which is very, very common in this industry, look at putting something like a tag-along and drag-along provision in your ownership documents that would compel that person to participate in that transaction as long as a majority of the owners of the company have approved it. That way you're not, tracking them down in the mountains and trying to find their signature just to make this big, important deal happen. And we do hear about that. It happens. And then, the way these conversations happen, whether you are out kind of shopping or not, usually you will have a high-level indication of interest where you may give a person a couple of high-level details about your business, enough to get them interested. And then typically before you go further, you're going to sign a non-disclosure agreement. And as they dig in, there are a bunch of things they're going to want to see to validate what you represented about your business is true. And in some cases, they may want to look at all this information before they even make you an offer. In other cases, you might get an offer, a term sheet, or a letter of intent. Typically, these are non-binding, but they at least set maybe the price and some other major parameters. You may have that in place before before you have to turn over all of this documentation, perhaps after. Typically, the more you can share, the more sophisticated you are going to appear to any potential buyer. And that, in and of itself, is perhaps going to result in a higher value and a smoother transaction otherwise. And so the things they're looking to see are all of your corporate documents in order. They need to be signed. I can't tell you how often we get a company's operating agreement or bylaws and it's missing somebody's signature. That's never going to cut it. It's never going to be okay. It happens to us all the time, right? In addition to your organizational documents, you want your financial statements. Ideally, you have a good CPA firm performing an external audit or at least a review and giving you a report validating your financials every year. If you're big enough, you might also want additional audits to validate your internal controls. Because when you show somebody a financial statement, it's just numbers on paper. And until you can validate that the dollar figure that is in cash and the dollar figure that is in inventory and all of these other important dollar figures that are on this financial statement are actually correct, they're meaningless. And so it's really good to be able to demonstrate as a cannabis business that you have good internal controls. And this is where it's actually kind of a good thing that we're in such a heavily regulated industry. And here you thought, having ABC showing up all the time and always looking over your shoulder was going to be a bad thing. And certainly that can be stressful, especially for the people in your compliance department. But there's a lot of good news too, because you're required to keep very detailed records of your inventory, very detailed visitors logs. You're required to retain the security camera footage for those cameras that are covering every square inch of your facility. And all of this can be used to demonstrate that your business has good internal controls in place and that the financial information that you're providing a potential buyer is accurate. You can also help demonstrate some of this stuff with the help of ABACA. We have smart safes and cash recyclers that can show a live data feed into the cash. And maybe you have 4 dispensaries or 5 dispensaries across a multi-state area, and you're sitting here in an office in Little Rock, and you want to be able to show this is how much we've got everywhere at all times. Well, you can do that. And so there are things you can do and ways you can prepare your house so that when somebody starts looking, everything looks good.
I think you bring up 2 points there that from our end, what we see that really helps facilitate these deals. One is putting a team together. You need to get an attorney involved and a CPA involved as early as possible. Having a CPA in this industry is more important than any other, and having a CPA in any other industry is critical. So, with 280E and tax compliance, any buyer who comes in, even if they're not acquiring the whole company, even if they're coming in to buy a piece of it, they don't want to take on any risk of tax exposure. And if you have just kind of been doing 280E on your own and navigating that process and doing your tax filings on your own, that's not going to cut it, and it's going to make buyers run for the hills. And so the earlier in the process you can get a good CPA who's knowledgeable on this industry, audit your financials, make sure all of those things are being done correctly and being reported correctly, that's going to really help facilitate this process. And then your own internal team. Again, we talked about a typical acquisition process can take 3 months, 6 months in any industry. I have owners of businesses who just by the week 6, 7, and 8 are ready to pull their hair out, and they're no longer having fun. They are no longer running their business, and they're no longer having fun. All they're doing is responding to pages and pages of legal documents, disclosure requests, all of these things. And so you need to make sure whoever it is on your team, whether it's you as the owner, whether it's your GM or operator who's kind of in the day-to-day, if they're going to be the point person for kind of the legal side and navigating that, somebody's got to be around to still run the business. And so having your team built out and knowing who's on first, who's on second, who's playing which role early on can really just kind of avoid issues down the road. And we talked about the possibility that some of these deals fall through. Things change, regulations change, laws change. You may be 3, 4, or 5 months into the process and getting ready to close, and all of a sudden the buyer backs out. Again, typically through this process, the only contract you have with a buyer is a letter of intent or a term sheet. Those things are not binding contractual obligations. They are a statement of what people intend to do. But they are not in and of themselves a binding contract, and it's not binding until you have pen on paper on that final contract. And we've had deals that have been a day away, a week away, and then something's popped up, maybe a lawsuit or a change in regulations, and that deal goes through. And so you need to be ready after this process, if you don't sell it, to go back into the saddle and be able to run the business and make sure that you haven't spent so much time and energy and resources and focus on the transaction that you've forgotten about your business and things have gone wrong operationally or financially during that time.
Yeah, a team is so important for a variety of reasons. If you're in the ownership position or in the C-suite, you're out on the road raising capital or looking for strategic partners for a merger or a partnership, or to bring a big brand here to Arkansas or other states. That's a full-time job externally, and so you need the right people internally running things. Now, for those of you who are in the crowd who are those right people, and you're sitting here listening to us talk, and you're thinking, hey, what the hell? They're going to sell the business out from under me, and I'm going to be here without a job. I kind of want to talk to you guys for a minute, because that can certainly sound scary as well for those of you, who have really helped these companies get off the ground and succeed and serve the 80,000 plus patients here in Arkansas so well. And that's where I want to kind of call back to something I said early on in our conversation here, which is that we are all now experts in this industry. That's hard to believe, but 4 years working in cannabis is a very long time, given how short of a period of time this industry has existed as a legal part of commerce in the United States. And so if you're in this industry early and have expertise, there are a few things to remember. One, we are kind of in a labor crunch right now. Talented people are hard to find. And so if you've got skills and expertise and institutional knowledge, you've got leverage. And that is especially true in the cannabis industry. You've also got options as new states like everywhere from Mississippi to South Dakota to New York open new businesses, over the coming years. They're going to need people as well. And so just because you might think it's easy and natural to think that, if the dispensary or cultivation facility that you're working for does engage in a merger or acquisition type transaction, that would be a bad or scary day, but that's typically not the case. That's typically a great opportunity for you to perhaps negotiate for, that promotion you've been pushing for, that increase in compensation, or to take your expertise somewhere else. So, for those of you in the crowd who are not necessarily engaged at a transactional level, don't worry. All of these things that are happening in the industry, while they could sound, potentially problematic for you, play your cards right. They could present some real opportunities as well.
Yeah, I think that's a good point to make. If you're a non-business owner and you're involved in this industry, either as a patient or as an employee in the industry, buyers, when they look at businesses and they do their due diligence and analysis, they don't want fundamental changes in the business for the customer, for the employees, or for anyone. They've modeled things and looked at the business in its current form and how it's operating today. Not to say that there aren't some employment changes that happen over time, just like in any business, but buyers typically do not want to come in and disrupt the entire way that the business is operating. They don't want to lay people off and fire people. Most of the time, they want to keep things as consistent as possible. And a lot of times that's built into the terms of the transaction. And so for employees, it's not this dark day most of the time. It is an opportunity, if nothing else. For patients and customers, most of the time they would not ever even know that a transaction happened. Maybe sometimes the branding changes, but for the most part, those owners, the new owners, want the business to look exactly the same, and they don't want people to think that anything has changed about the dispensary that they go to. So typically, you don't really see the changes that are happening kind of underneath the hood. At least that is the hope and goal. Let's talk about this as we go into 2022. Do you foresee any changes or anything coming down the road from an M&A activity, or even from the federal level when it comes to regulation? I know the House has passed the Safe Banking Act like 14 times at this point.
Six.
Is it six?
Still ridiculous, right?
Yeah.
And they really ought to pass it. It would be the easiest and least controversial form of cannabis reform to pass. Of course, 3/4 of cannabis businesses nationwide, and all but 1 or 2 here in Arkansas, do have a bank account. So like a lot of things in Washington, it's sort of a fix for a problem that the world has already solved on its own. But symbolically, I think it would be important, just to get that nod from the federal government that yes, in fact, this is a legitimate industry. You're not a criminal if you're participating in it, and you're not laundering money if you put money from it into the bank, right? That'd be nice. We would appreciate hearing that. Still don't know whether it's going to happen. I give it 50-50. But, whether it's this year or next year or the year after, 41, 42 states now having some form of state-level cannabis legalization, it's just about impossible to roll back on the progress we've made.
I agree. I think one thing that it would do, again, it's triggering or signaling the acceptance at the federal level. Being able to take out loans, even if you have a bank account, being able to take out loans, having banks that a lot of times either invest in or direct some of these institutional funds who invest in traditional companies, opening up those markets and allowing them to be able to take a more prominent position in the industry, again, it kind of lifts all boats.
Yeah, lending is a great example. I think we do have a few more minutes left to talk into that because to dive into that topic, because that is one of the areas where it's kind of a ripple effect of the banking problem. The cannabis industry has also suffered in states where there are social equity programs, such as the one that Eddie was talking about in the last session. That's been an even bigger problem because now you're finally giving minority and disadvantaged entrepreneurs an opportunity to get into the industry, and then they can't even get a loan to get started. And the biggest operators, well, they've been able to get capital for the last few years. They can hit the institutional markets. There are massive corporate debt issuances that are supporting those balance sheets. And for the small operators, it has been tough, but it's gotten better. Over the last year or two, we have seen more banks and credit unions come in and lend into the space, even here locally. There was a really big deal announced earlier this week, Safe Harbor Financial, which is related to Partner Colorado Credit Union, one of the first financial institutions to serve cannabis. They did one of those SPAC transactions like we were talking about earlier. They merged into a special purpose acquisition company that has capitalized itself for the purpose of making loans across Safe Harbor's network to cannabis operators nationwide at something closer to normal bank financing rates. And so, historically, cannabis operators who've been able to access financing had to pay quite a bit more, and of course, many just couldn't get it. There are starting to be more and more options. So the playing field is leveling. It gets better for operators every year.
Yeah, I think hopefully we continue to see progress on that. I've long ago stopped forecasting what Congress is going to do. As a tax attorney, I certainly don't get involved in that sort of guesstimation. I was one who predicted that Section 280E would have been overturned 4 years ago. Here we are still today. And that's not even a topic that's really even being discussed at the federal level.
And that in and of itself is kind of baffling, because if you wanted to do one thing that would truly have a massive financial impact for cannabis operators nationwide that would absolutely trickle down to lower prices for patients, it would be not fixing banking, but it would be repealing 280E. The tax provision that means after taxes, many cannabis businesses nationwide actually lose money, which is unheard of. That doesn't happen in any other legal industry where your taxes can actually exceed your revenue for a time period. It's nuts, but it can happen in cannabis because of 280E. So I don't know, if it were up to me, that's what they'd be repealing and working on. But, I don't really know. I could never bet on or guess what Washington is actually going to do or not do about anything. But what I do know is this: it is clear that the cannabis plant and the cannabis industry are, powerful enough and important enough to so many people that even if the government continues to do nothing, we're not going to be there.
Like a weed, right? You're going to stick around.
Right.
For those of you who aren't intimately familiar with 280E, congratulations, because it is a mind-boggling issue that we're all paying the price of a 1970s cocaine dealer with a good tax attorney created. And so 50 years later, here we are still dealing with the issue of cannabis businesses not being able to deduct really any deductions. You can kind of amortize costs into cost of goods sold, which helps out cultivators, does not really help out dispensaries nearly as much. I agree. I think from a financial perspective, for the operators today, but also for opening up markets and making these businesses more desirable for buyers. Repealing 280E probably goes a lot farther than the Safe Banking Act. Because as Dan mentioned, most businesses in this industry have found a way to bank. They've found a way, even at a small level, even if it's more difficult to get loans and to provide financing. But there is no workaround 280E. There is no business like Dan's that you can go to that finds a solution to 280E other than some creative accounting with cost of goods sold, which unfortunately with the IRS, they're always responding, and it takes them about 5 years to respond. So, a lot of the things that are even being done with cost of goods sold and with a lot of these accounting and tax mechanisms, truly haven't been blessed by the IRS yet. We don't have a ruling that says that you can't do it. And it's going to take a few years for people to get audited, and then for the IRS to challenge a position that's taken, and then for that to go to court, for us to actually have binding precedent that we can all rely on. And unfortunately, we're still probably a few years away from that, but things are getting better. Dan, any parting words to provide to the audience?
Really, it's been fun to kind of, sit here and catch up on how we've gotten here as an industry here in Arkansas and where we're all going from here, both within the state and beyond. It's always good to get back together, with our peers in the industry here in Arkansas, and, looking forward to see what's to come.
Yep, I agree. And I would say, as an overall message, even if you're someone in the industry who's not looking to sell, I think we anticipate, I think Dan does too, that there are going to be people who are looking for you. They're going to come knocking on your door. Even if it wasn't something that you were expecting or looking for, these people will show up. And it will do you a lot of good if you kind of have your house in order. And all of these things are taken care of on the front end instead of the back end, and to be kind of, and not to be reactionary to those processes. So hopefully 2022 is another solid year. Hopefully we get some progress on the federal level that makes this a little bit easier, but I'm not going to hold my breath.
Me neither, not unless I'm holding the bomb here.
Well, I'm managing partners here, so I'm not saying that.
Thanks, everybody.
Yeah, thank you.
Okay. Thank you all very, very much. Appreciate you. All right. Folks, we're going to break for lunch right now. Tacos Godoy is out front. If you want to go get tacos, we're going to reconvene here at 12:30. So 12:30 will be our coming back.